Hello and welcome back to the QuantScore Financial Show, brought to you by Math and Maticians. Every week on this channel, we use algorithms and quantitative analysis to find you the best investment opportunities in the market. Today, we're diving deep into what we've uncovered, bringing you a handful of undervalued and overvalued companies our algorithms have flagged using our QuantScore prediction model. As always, please make sure to do your own research and due diligence before making any investment decisions. And remember, this video is made strictly for educational purposes and to spread the word on algorithmic prediction models for stocks, as well as spread the word of quantitative trading. We'll begin with our 6 undervalued stocks for this week. Then we'll flip the script and jump over to our overvalued stocks. First up on our list of undervalued stocks, we have Prudential plc, an asset management and insurance provider with the ticker symbol PUK. Providing financial services across Asia, Africa and the US. Trading at $23.14 a share, Prudential has a market cap of $30.14 billion and holds the second lowest price per earnings growth ratio on our undervalued stocks list, currently at 0.858, strongly suggesting undervaluation. Prudential's forward PE of 11.4 is lower than the S&P 500 average. With a return on assets of 1.5% and a return on equity of 13.2%, Prudential shows steady growth and a compelling opportunity. Next, we have LyondellBasell Industries NV. Ticker symbol LYB is a chemical company that produces plastics, chemicals, and fuels. LyondellBasell is trading at $59.77 with a market cap of $18.78 billion. It has a PEG ratio of 0.736, suggesting it might be undervalued relative to its earnings growth. LyondellBasell has a forward PE of 12.59, indicating a potential discount compared to its future earnings potential. Looking at the company's financials, we see an ROA of 3.85% and an ROE of 7.44%. The chemical industry is often cyclical, and these figures are actually pretty solid within the sector. Our algorithm takes a long-term view and factors in things like industry cycles and future growth potential. Overall, LyondellBasell's low valuation metrics, coupled with its position in a vital industry, give it a quant score of 9. For our third pick, we're heading east to take a look at Baidu Inc., ticker symbol BIDU, often referred to as the Google of China. This tech giant dominates the search engine market in China and has been making significant strides in artificial intelligence. Baidu is currently trading at $89.34 per share, with a market cap of $32.03 billion. Baidu boasts a forward PE of 8.73, which is quite attractive, especially when you consider the company's growth potential in areas like AI, cloud computing, and autonomous driving. In terms of financials, Baidu has an ROA of 0.032 and an ROE of 0.0885. Baidu reported impressive quarterly earnings growth of 1.479, although revenue saw a slight dip of negative 0.024. Our algorithm sees this long-term potential and has given Baidu a quant score of 11. Now let's talk logistics with United Parcel Service Inc., or more commonly referred to by their ticker symbol UPS. Trading at $101.32, UPS has a market cap of $85.99 billion. UPS has a forward PE of 14.04, which is reasonable considering its stable business model and consistent earnings. Financially, UPS looks solid with an ROA of 0.0738 and an ROE of 0.359. While quarterly earnings growth was a modest 0.074 and revenue dipped slightly by negative 0.007, UPS is known for its steady long-term growth. Our algorithm recognizes this stability and growth potential, giving UPS a quant score of 17. Moving on to the healthcare sector, we have Novo Nordisk AS with the ticker symbol NVO. Novo Nordisk is a global leader in diabetes care and other chronic diseases. Trading at $64.37, Novo has a market cap of $288.38 billion. Novo has a forward PEE of 16.18, which, while not exceptionally low, is reasonable considering its position in a high-growth industry like healthcare. The company boasts strong financials with an ROA of 0.233 and an ROE of 0.881, showcasing its efficiency and profitability. Quarterly earnings growth was a solid 0.15 and revenue grew by 0.195. Our algorithm has given NVO a quant score of 22, highlighting its potential as a long-term investment in the healthcare landscape. Now let's talk semiconductors with Global Foundries Inc., ticker symbol GFS, a leading provider of semiconductor manufacturing services. GFS is currently trading at $39.54 with a market cap of $21.93 billion. Its PEG ratio of 1.312 suggests it might be slightly overvalued based on current earnings growth. However, the company has a forward PE of 25.77, which could indicate a potential discount if it can capitalize on the expected growth in the semiconductor market. Financially, GFS has an ROA of 0.027 and an ROE of negative 0.0165. GFS reported quarterly earnings growth of 0.582 and a slight revenue growth of 0.023. Our algorithm recognizes the long-term potential in the semiconductor market and has given GFS a quant score of 28. Next up, we have HEICO Corporation, ticker symbol HEI, a company specializing in aerospace and defense products. HEI is currently trading at $278.75 with a market cap of $33.45 billion. Its PEG ratio of 3.922 might seem high, but HEICO operates in a specialized niche within the aerospace industry. The company has a forward PE of 64.94, which, while high, reflects the market's confidence in HEICO's ability to generate earnings growth in the future. Financially, HEI looks strong with an ROA of 0.0715 and an ROE of 0.155. HEI reported quarterly earnings growth of 0.463 and revenue growth of 0.149. Our algorithm has given HEI a quant score of 21, highlighting its potential as a long-term investment in the aerospace sector. Now, let's talk about Cintas Corporation, ticker symbol CTAS, a company you might not expect to find on a list of potentially undervalued stocks. Cintas provides a wide range of business services from uniforms and floor mats to first aid and safety products. Cintas is currently trading at $220.85, with a market cap of $88.22 billion. The company has a forward PE of 44.25, which reflects its strong market position and consistent earnings growth. Financially, Cintas is a powerhouse with an ROA of 0.155 and an ROE of 0.403. Cintas reported quarterly earnings growth of 0.177 and revenue growth of 0.084. Our algorithm has given CTAS a quant score of 22, highlighting its potential as a solid long-term investment. Next up, we have Westinghouse Air Brake Technologies Corp., ticker symbol WAB, a leading provider of equipment and technology for the freight and passenger rail industries. Westinghouse is currently trading at $205.69, with a market cap of $34.95 billion. The company has a forward PE of 23.75, which reflects its market position and growth potential in the rail industry. Financially, Westinghouse is solid comparative to the rest of the overvalued list, with an ROA of 5.73% and an ROE of 10.7%. Westinghouse reported quarterly earnings growth of 0.229 and revenue growth of 0.045. This consistent growth, coupled with its focus on innovation in the rail sector, makes Westinghouse a company to watch. Our algorithm has given Westinghouse a quant score of 23, highlighting its potential as a long-term investment in the growing rail industry. Moving on to the real estate sector, we have Welltower Inc., a real estate investment trust that focuses on healthcare properties. Welltower is currently trading at $148.72 with a market cap of $96.06 billion. The company has a forward PE of 88.5, which, while high, reflects the market's confidence in Welltower's ability to generate earnings growth from its portfolio of healthcare properties. Financially, Welltower has an ROA of 0.0173 and an ROE of 0.0348. Welltower reported quarterly earnings growth of 0.803 and revenue growth of 0.303. This consistent growth, coupled with its focus on the growing healthcare real estate market, makes Welltower a company to watch. Our algorithm has given Well a QuantScore of 23, highlighting its potential as a long-term investment in the healthcare real estate sector. Now let's talk about a company that's disrupting the financial industry, Robinhood Markets Inc., ticker symbol HOOD. Robinhood is a commission-free brokerage platform that's made investing accessible to millions of people. Robinhood is currently trading at $61.76 with a market cap of $53.55 billion. Financially, Robinhood has an ROA of 0.0432 and an ROE of 0.214. Robinhood reported impressive quarterly earnings growth of 106% and revenue growth of 5%. Our algorithm recognizes the potential of Robinhood's innovative platform and has given Hood a quant score of 46.0. Finally, we have Palantir Technologies Inc., a company specializing in big data analytics and software for government and commercial clients. Palantir's technology is used for everything from intelligence gathering to fraud detection, making it a key player in the world of data analytics. Palantir is currently trading at $129.52 with a market cap of $302.35 billion. The company has a forward PE of 232.56, which, while extremely high, reflects the market's belief in Palantir's long-term growth potential. Financially, PLTR has an ROA of 0.0439 and an ROE of 0.124. Palantir reported quarterly earnings growth of 1 and revenue growth of 0.393. Our algorithm recognizes the potential of Palantir's big data analytics platform and has given PLTR a quant score of 46. So there you have it, investors, 12 potentially undervalued stocks that our algorithm has identified using quantitative analysis. From life insurance to semiconductors, from logistics to big data, these companies represent a diverse range of industries and sectors. Remember, this is not financial advice, and you should always do your own research and due diligence before making any investment decisions. So, if you enjoyed this video and found it helpful, please give it a thumbs up and subscribe to the channel for more stock market insights and analysis. Thanks again for watching, and until next time, stay calculating, my friends.